Are you dreaming of owning your very first home, but you're a little stressed out about the down payment and where that money's gonna come from? Don't worry, I'm gonna share with you my top 5 tips when it comes to saving money for your down payment. Open up a dedicated savings account, or just a separate account. It could be a checking account. Open up a separate account so that you can start putting money aside every single week or monthly, whenever you get paid, anytime you have a little extra cash. That way you can put a plan together, decide how much money you actually can save, the frequency that you're gonna do it in, set it up to that bank account so that it goes there every single week or month or however you want to do it. By the time you've got your goal for whatever dollar amount you need saved up for that down payment, it's set aside in a separate account ready to go. And little bonus tip, you know how you can like view everything on your online banking? You can hide certain accounts so they don't show up on that view for your online banking. Go ahead and hide that down payment one so you can't see it and you're not tempted to use those funds. If you do this far enough in advance, even depositing cash is okay. I know typically before when I've spoken about depositing cash, that's a big no-no when it comes to mortgage loans. But if you're several months ahead of time and you do have a lot of cash lying around, go ahead and put that in an extra account, because we know that by the time you have it all saved up and you're ready to go, we don't have to worry about sourcing those deposits or wondering where they came from. Go ahead and automate that savings. You've already got the dedicated account for it now, so now just automate it. If you get paid, for example, every 2 weeks, go ahead and set aside $200 or $300 to automatically go from your account once it gets deposited into that dedicated savings. That way it's slowly growing and you're not even realizing it because it's automated. Curb your unnecessary spending. I know we hear this a lot. There was actually a funny meme about it the other day. It was these 2 people that were in front of a castle and they're like, we stopped buying lattes at Starbucks and now we can afford this house. Like, it's probably gonna take a little bit more than cutting out the occasional latte over at Starbucks, but you do want to take a look at some of the things that you might be spending money on unnecessarily. I know coffee's a big one. You add that up, 10, 12 bucks a day for coffee times 365 or however many times you're going out to eat, that can add up to a significant amount of money. So if there are some things that you maybe could cut back on for now so that you can save money to buy that home, I promise you it'll be totally worth it. Then you can just buy an espresso machine once you're in your home and you can make as many lattes as you want. Understanding your retirement account, or maybe pulling money from a 401k. Now, this can be a good thing, but you want to keep in mind that there could be other things involved with pulling money out from a retirement account early, such as penalties, extra taxes. So I'm not going to get into all of it right here because depending on the type of account, but if it is specifically set up for a retirement account and you're wanting to pull those funds for that down payment, make sure you're researching it and you're having that conversation with a CPA or a tax advisor or somebody that can advise you what you might actually be paying or what it's truly going to cost you by pulling those funds out early. Another little tip, I know not every employer offers this, but some employers, if they do have a 401k matching program, or if you're putting money to an employer-based 401k, some of them offer 401k loans. So instead of pulling that money fully out and taking that penalty on your taxes and the early withdrawal penalty, you can borrow against it. And the best part is, on the mortgage loan side of things, normally we don't like extra debt because that's going to hurt your debt ratio. Well, if you're pulling money from a retirement account or getting a loan for that account, we don't have to count that monthly payment as a debt against you because you're borrowing against your own money. So we don't care about that. So a nice little tip, if you do have money saved up in your 401k, it might be a great idea to put that money as your down payment for the house, because the stock market's kind of crazy right now, but we know home values just keep going up and up and up. Finally, if you truly don't have any savings and you're tired of waiting, research down payment assistance programs. In many cases, there are programs available depending on where you live. They can be geographical, funded by the state. Sometimes there's national ones. I had one the other day that was for like Native Americans. So there's a lot of different down payment assistance programs out there. Make sure you're doing your research and seeing if one of those might work for your situation, or you can just check out one of my videos that talks about down payment assistance. So these have been the top 5 tips for saving money for that first down payment. If you want to look at some zero down loan options, hit me up in the comments. I'd be happy to help. If you are ready to apply today to see what your options are, the link is right here in the description. Or if you're not quite ready, that's okay. I've got a gift for you as well. There's a link for a free first-time homebuyer's guide. Click on the link, put in your email, it'll get sent straight to you, and it has lots of great information about everything you might need to know when it comes to buying your very first home.